Let's be realistic. Can you really buy a real estate investment property with as little as 5% down payment or even less? Actually, yes, you can. Typically, a mortgage lender is going to want to see a minimum of 20 to 25% down payment on the purchase price of any investment property that an investor is out there looking to buy. And for a new investor, that 20 to 25% minimum requirement can be very, very intimidating and a big high hurdle to get over. But there are ways around it, and I'm sure you're going to like hearing about them. So much so that you might as well hit that like button on this video right now to help feed that YouTube algorithm. And of course, if you are not yet part of our Confident Real Estate family, you better be hitting that subscribe button as well. All right. Now, we've all seen videos about seller financing and how to get personal loans and other creative financing methods in order to achieve the 100% or near 100% payment of an investment property. I've even done some videos covering some of those topics because they are applicable to certain people and certain scenarios and certain properties. But all the dominoes or ducks, whatever analogy you want to use, have to line up in a row in just the right sequence for you in order for those to really be practical. Because for the most part, seller financing and personal loans in order to buy real estate property as an investment, it's not practical. And from a financial perspective, you might own a property, but you're not really seeing any of the money from it. It's not economically practical. And in a lot of cases, it's actually a detriment to you. So prior to 2008 and the Great Recession, mortgage lenders were giving away loans. It wasn't uncommon for a real estate investor to go out and get an investment property with 100 to 110% financing in order to buy the property and even do some of the renovations without coming out of pocket for even a penny. But I think we all know how that ended. And to be quite honest, the over-leveraged real estate investment loans were a major factor in the economic crisis and housing market crash that ensued, because there was just a gluttonous volume of people who really didn't know what they were doing in real estate, who were investing in real estate simply for the fact that banks were giving away the money and it was costing them little to nothing out of pocket. Sometimes they would even get a check on top of buying the home and walk away from the closing table with cash in hand and a deed to a property. It was a horrible scenario, and in hindsight, I don't know why any of us ever thought that that would be something that could sustain itself. Everyone just thought that the housing prices and values would continue to skyrocket upward with no end in sight. And obviously anybody who lived through the dot-com bubble in the earlier section of the 2000s, around 2000, 2001, well, we all know how that ended. And guess what? The housing crisis ended the exact same way. The bubble popped and everybody had to come back to reality. And because of that, now banks are not ever going to look at you if you can't put 20 to 25% minimum down payment down when you go to buy an investment property. But again, there is a way around it. I promise you, it is not all doom and gloom. Just to be clear, post-recession, lenders not only want to see that 20 to 25% down payment minimum because now private mortgage insurance is going to be required for anybody who puts down less than 20%, which for you as an investor means you're going to have an extra expense every month on top of the mortgage payment that you need to make to your lender every month to pay back that mortgage. You're going to have to pay private mortgage insurance because you didn't put down a minimum of 20%. But on top of that, even if you can put the money together, scrape it together, sell some assets, do whatever you have to make that minimum 20% down payment, the lender's still going to want to see a significant amount of money left over in your bank account so that you have the ability to show them that if something goes wrong, you have extra cash lying around to take care of those problems. And it's not a situation where 3 months into owning the property, a pipe burst floods the whole thing, insurance is claiming that you don't have the right coverage, and now you don't have the ability to rent it, and therefore, because you don't have cash flow, you don't have the ability to actually pay the mortgage lender back. So a mortgage lender is going to want to see that you have cash reserves beyond just the 20-25% down payment that they're now going to require any real estate investor to put down. And that is something you have to take into consideration. So on a $200,000 investment property, it's not uncommon for a lender to say, after you put down your 20%, which is $40,000, we still want to see an additional $50,000 to $70,000 sitting in your account. Again, big hurdles to overcome, but there is a way. The only realistic way to get around that 20 to 25% down payment minimum requirement for an investment property is to house hack. And I know you've heard that term. We've done videos on that term. I'll leave links to the videos we've done down below that cover how house hacking works and how you can do it and the truth about the house hacking process. But that is truly the most beneficial way for you to dip your toes into real estate investing, because you have to start somewhere. And if you want to get into real estate investing but you don't have significant cash on hand to put down on a down payment for an investment property, house hacking is your absolute best bet. You may be able to qualify for as little as 3 to 5% down payment on a property where you buy a multifamily property, anywhere from 1 to 4 units. Beyond 4 units, banks tend to view that as commercial, but anywhere from 1 to 4 units, but it must be your primary residence. If you live there as your primary residence in one of the units and rent out the other units, whether it be an additional 1 to 3 units, whether you're buying a 2-family or a 4-family, right? Then you have the ability to qualify for significantly less down payment financing. It is your primary home. You might be able to put down 3 to 5%, get a bank loan for the remainder of that 95 to 97% debt for the purchase price, and you can rent out the remaining units that you're not living in as your primary and start to build some cash flow. Your tenants will basically, if you do it right, pay your mortgage for you so that you're living for free. None of your income from whatever job you may have is going towards your mortgage or your real estate taxes or your insurance, because your tenants are paying that. And that's the cash that you can then put aside to invest in a future property. Plus, you're building capital appreciation on the property that you bought, that you're living in, that you're now renting out to tenants who are your neighbors. And eventually, you'll be able to move on from that property and sell it and go buy a property for yourself or a larger property that you can live in as well. And you'll have some cash reserves, you'll have equity appreciation in this house, and you were only required to put 3 to 5% down initially. And it gave you the opportunity to build up your reserves and build up your portfolio of assets in the capital appreciation of your multifamily house and the cash that you were able to save on the side because you no longer had housing costs. And that is the real beauty of house hacking, because it is extremely beneficial to somebody who wants to get into real estate investing but doesn't have the cash reserves available to put up significant funds on day one. Great way to dip your toes in the water and get your start. I have to say, I know several multi-millionaire real estate investors who own huge apartment complexes, retail shopping centers, you name it, that all got their start with house hacking. They didn't have the money initially to put up for a 20-25% down payment on a $250,000 home. And now they live in $4 and $5 million homes and own a portfolio worth $50 million to $100 million. I can think of 3 people I know off the top of my head that I know for a fact started as house hackers, and one of them, his net worth has got to be close to $250 million at this point. He is a major player. So just be aware that this is a useful tool that many very successful people started with. And it is the ability to get you into the game that is most important. You don't want to be stuck in analysis paralysis and sitting on the sidelines watching everybody else on the court, on the field, playing the game that you wish you were involved in. Get out there, take action, and just do it. As always, I hope you got a lot out of this video. Don't forget to smash that like button if you haven't already, and of course hit subscribe if you're not, for some reason, part of our Confident Real Estate family just yet. As always, I appreciate you watching to the end. Until next time.